Hey everyone, welcome back to the channel. Today we re-diving into something big that's quietly happening behind the scenes in the financial world. Something that could have a massive impact on both the Iraqi Dinar and the Vietnamese Dong in 2025. You've probably heard all kinds of rumors and wild predictions online. But in this video, we're cutting through all the noise. Global elites, insiders, and big institutions are reportedly gearing up for a coordinated financial move that could shake markets and possibly redefine how these two currencies are valued. This isn't just hype. It's the kind of behind-the-scenes preparation that usually happens before major financial shifts. And even though it's not splashed all over the headlines, the signs are becoming too obvious to ignore. By the end of this video, you'll see why experts think we're entering a historic moment. What signals to look for, and why patience and awareness could be your biggest advantage right now. Over the past few months, something unusual has been going on in both Iraq and Vietnam. It doesn't look like random market activity. Analysts have noticed a pattern of policy tweaks, economic reforms, and international partnerships that all seem to point to something big coming. Iraq has been restructuring its economy, tightening up its monetary system, and improving transparency. These are the kinds of steps countries take when they are getting ready for their currency to step onto the global stage. Meanwhile, Vietnam has been quietly building one of the strongest economies in Asia, signing major trade deals, and pulling in global manufacturers. When you connect the dots, it really looks like both nations are moving in sync. Some even call it a double RV or dual revaluation, where both currencies could rise in value together, an event that could grab massive global attention and change how investors view emerging currencies. Let's start with Iraq and the dinar. Behind the scenes, the Central Bank of Iraq has been very active, budgeting regulations, upgrading cross-border payment systems, and improving financial transparency for global investors. Moves like this don't happen without a purpose. For years, the dinar has stayed undervalued despite Iraq's huge oil wealth and growing trade role. But now, with stronger reserves and new trade partnerships, Iraq seems to be positioning its currency for bigger things. Reports suggest banks have been testing advanced international transfer systems, basically getting ready for smoother global transactions. All this points to one thing. Iraq might be setting the stage for a potential revaluation, and if global conditions line up, that could mean serious opportunity for long-term holders. Vietnam, on the other hand, has played the long game, keeping the dong's value low to boost exports and attract global companies. That strategy has worked brilliantly, pulling in tech giants and building a rock-solid manufacturing base. But with record foreign reserves, steady inflation, and strong trade with the US, Japan, and the EU, Vietnam doesn't need to keep its currency undervalued forever. Analysts now think a correction could be coming, one that finally lets the dong reflect the country's real economic power. Such a move could boost confidence at home and attract even more global investors. Combine that with Iraq's progress, and the idea of both currencies revaluing around the same time starts to look pretty real. Double RV that could send ripples through the global market. To really understand what's happening, it helps to look at how central banks operate. They never make big moves without a clear plan. Iraq's tighter monetary control, digital upgrades, and reserve management all look like strategic groundwork, likely with advice from international financial groups. Vietnam's careful, yet deliberate policy changes tell the same story. When the big financial players start shifting their positions quietly, it's usually because they see something coming. And recently, there's been unusual forex activity. Short system freezes, and after-hours maintenance at several banks, all signals that often show up before major currency changes. These things take time, but the signals coming from both Iraq and Vietnam suggest that 2025 could be a huge year for holders of these currencies. Timing, of course, is everything. Currency reevaluations are rarely random. They're usually coordinated among central banks and global financial partners. The fact that Iraq and Vietnam are updating trade policies, digital systems, and economic frameworks at the same time is a pretty strong sign of alignment. And when two historically undervalued currencies seem ready for a value adjustment together, that's a big deal. Investors who pay attention to these clues can prepare early, while others might miss the first wave completely. A double RV would be massive, because it's not just one nation stepping up at S2, which could double the impact on trade, investment, and even global liquidity. Now, focusing back on Iraq, the government has been addressing long-standing problems like corruption and inefficiencies that have held the country back for years. By cleaning up its system and improving transparency, Iraq is becoming much more attractive to international investors. That's a key step toward getting the dinar properly valued on the global market. Add in digital banking upgrades and blockchain-based systems for cross-border payments, and you've got a setup for serious international adoption. These upgrades might not sound flashy, but they're exactly what's needed to support a higher value currency. Vietnam's strategy has been just as smart, just quieter. While Iraq's actions are more visible, Vietnam has focused on steady, disciplined growth. The country's kept inflation low, built massive foreign reserves, and gained trust from major global companies. Big brands have moved their operations there, proving confidence in its future. At this point, keeping the dong artificially low makes less sense. Many experts see a natural correction coming soon. And if Vietnam's move lines up with Iraq's, we could be looking at a rare double currency revaluation that could catch global markets off guard. International institutions are paying attention to. The IMF, World Bank, and regional finance groups have all been dropping hints about economic realignment and currency readiness in their latest reports. They never say names outright, but anyone who's followed past reevaluations knows the language. These subtle clues often appear before the real news breaks. It's all part of the quiet prep phase, testing, signaling, and aligning without triggering mass speculation. That's what makes this situation so interesting. It feels familiar to those who've studied past currency shifts. As investors around the world are starting to react, as private funds, government-linked groups, and banks are slowly adjusting positions. Forex patterns show calm periods followed by sudden movements, and some regional banks in Asia and the US have quietly boosted their cash reserves just in case. These are the kinds of behind-the-scenes moves that happen before major financial shifts. It's a sign that the big players are getting ready. Dinar and dong both fit the classic pre-revaluation profile: quiet preparation, international coordination, and tightening systems before the reveal. So what does all this mean for everyday holders? Well, if a double revaluation really happens, even a modest rate adjustment could be life-changing for long-term investors. Imagine the dinar climbing back toward pre-war levels, or reflecting Iraq's real oil-backed strength. Or the dong gaining enough value to match Vietnam's growing economic influence. It's not about overnight riches. It's about understanding the bigger picture and being patient. History shows that the quiet build-up phase usually comes right before major financial turning points. The key is recognizing the signs early and staying calm. Here's what to watch for: updates from Iraq's central bank on digital banking or exchange policy changes, any hints from Vietnam's state bank about valuation reform, or IMF mentions of both countries in the same reports. Keep an eye on banking activity to things like sudden system tests or forex screen freezes can be clues. These have all been part of previous revaluation setups. The more you observe, the more patterns you'll start to see. Remember, in this game, knowledge really is power, and patience might be the most valuable asset of all. Big currency shifts take time and a lot of coordination. Rushing based on rumors or emotions can lead to mistakes. The smarter move is to track credible developments and wait for verified updates from official sources. The potential rewards for a double RV are huge, but so is the importance of timing. Those who wait for real signals and act strategically often come out ahead when the dust settles. The digital side of all this is huge too. Both Iraq and Vietnam are upgrading their systems for blockchain, instant cross-border payments, and digital wallets. These aren't random tech upgrades. They're the foundation for modern currency management. A strong digital infrastructure gives confidence to global investors and makes transitions smoother if new rates are introduced. In other words, these digital rollouts are quiet but powerful signals that both countries are preparing for something major. What's really rare and fascinating is how closely Iraq and Vietnam seem to be moving in sync. That kind of timing doesn't happen by accident. It usually means both countries see mutual benefits in aligning their financial upgrades. For them, a simultaneous revaluation could attract foreign investment, boost trade, and strengthen their reputations globally.